Welcome to Trading Lounge and the US indices, and it's the 14th of December. So with the S&P 500 here, I'm looking at it in two ways. I'm looking at it as a correction of wave 3 here and a WXY here for wave 4, and from this move to this one here, we're looking at it in three waves, as an A and a B and a C wave. The other count for this, of course, is that we have a top in as wave 5 here, and that would make this one here as wave 1 here, and it would make this one here as wave 2 here, and would be coming into a much bigger bearish market here. Either way, we're still looking for more downside here. We do have a count on our website that would only bring us down to around these lows here, but I'll leave that for the website and members. But yeah, let's drill in and have a look at this little section here. So on the 4-hour chart here, I was looking at this as 1, 2, 3, 4, 5 here for wave 1 and back for wave 2 here, and then I was looking down for wave 1 here, and I was looking at this as wave 2, but we had another little push higher here, so we need to place this in this space here. And now we're looking at wave 3 moving lower through here, and technically we would see if this low here was breached, then that would make this an A and a B and a C correction here if this was breached. But technically it can still be up for 1 and back for 2, up for 1 and back for 2, and can continue to build to the upside here. So this is a really important level here, the 2650, as I've mentioned before. It's halfway between this medium level here at 2500 and 2800 here, which is a minor level in regards to the trading levels. So whatever comes of this here, this number here as support or resistance would be the trigger in that direction. So taking the low out here would trigger this deeper move down into the 2500 here, but at the same time too, taking this high out here would bring us higher here, and then that would be a long trade to the upside here. So we have our trades on the 1-hour chart here, so let me just get this into perspective here somewhat. Now we're looking at this move down here in 5 waves of wave 1 and back for wave 2. And then down for wave 1 here, and as I mentioned, I did make an error here. I was looking at this as an ABC correction here. We're still short of the 61.8%, and we're still short on that one too, by the by. So but now we've got this as an A and a B and a C wave to this point here, the line across here as we do, and that triggers this short trade in. And we can also look, if this is triggered here, then we can look to short this low here as well. Also the stop can just go above the 2672, with this is in group 2 here, so from 26,000 to 2,600 to 700 we have group 1, which is 10, 20 and 30, so we can put another one in here as 10 roughly. 10, 20 and 30 make up group 1. Then the midpoint, which is part of that 2650 in this case, just got a bit more meaning, and then we have group 2 here, 65, 72 and 80 here. So yeah, that's really about it really. Of course, coming down to this low here would give us a bounce off the 2620. We also know too, working group 1 to the downside, when the 2620, the number 2 here, the 20 in this case, and number 2, the pivot within group 1 here, once that becomes the retested resistance, and the market is pulled down psychologically to the order flow at 2600. So we can also look to add under here as well. So you can start building your trade in. I mean, any retest in here could be added as well. We just need to move through this carefully. Now that's pretty much it for that. It's all pretty simple as such, and like I said, continue to build in more trades down through here as you see fit. And going over to the Nasdaq, same. I'll just go to Amazon first. We've been sort of looking at this for a while, so much the same here as well. We're looking at 5 waves down here for wave A, which could also be wave 1, 2 by the by, and an A and a B and a C here. I'm struggling to get 5 waves up here, actually. It's more like a B, and a C wave up here. So this is why I've got this little A wave sitting here. Got that on copy there. But anyway, we've actually got this as a short trade now. I've probably got into it a little bit early, but I'm hoping to build into it on the way down with a couple of two other Nasdaq trades from last night. So we'll see how we go with this. So just on the hourly chart here, we were looking at, if you want to short this, technically taking this low out here because of an A and a B and a C here, technically taking out here would trigger a low in here as well. Just watch out for this trend line through here. It will offer some support. But yeah, look, seeing this as the retested resistance here, the other point here to make is that that here makes that a corrective move technically, okay? So, but in terms of trading, we look at this, we'd want to see the move, well, it vibrate across the 1650, a medium level. Once it's finished that, we want the first low to come in place, then the retest. So then that's where the short trade would come in here. So you can put that under here. So it gives us another little edge there of a better price. And then if it's triggered here, yeah, and just watch where you put that figure there as well. So you wouldn't want to put that on 30, for instance, because you're going to get a bounce off that again over here. So 29, because you want those orders to be taken out in the market depth at that price. Anyway, that's the trading levels thing. I'm not going to go into that now. And the stop here, of course, can be moved down to not just this high, but it can also be moved down to this high here. And once again, using the trading levels concept of where to put prices right down to the last cent. I'll just save that and let's go and have a look at the Nasdaq. So just on the 4-hour chart, the same scenario here as well, with the move down here as in wave A, and then an A and a B and a C wave here, and looking at this as 5 waves down here, and then back for wave 2 here. So this is slightly different from the S&P. Just look at on a daily chart here. I could count it differently as well, but because it comes so high here into this space here, I need to look at it like this. So we do have a reasonable A, B, and C wave here as the correction. So you can have your first trade built into this already through here. Would need to bring that stop down here, make it nice and tight, and you can see here that, I mean, technically, you can see here that it's already retested. It's retested. It had a low here, retested. Let's just open this up a little bit, shall we? So I had this low, so that would have been a trigger, and the market's moved up. Then it's moved down again. So then technically you can put that under here, because the market's come back up and moved through that there. So that's why that could be in there as well. If this correction is going to get any bigger, this is where the problem's going to come in here. It's going to, I mean, this is the most important level here. The 600 is important and the 700 is important, but it's this 6650 here, the halfway mark between 5 and 8, the Fibonacci numbers. So that's going to play out here. And the move down through here can also be counted, this is why we need to be a little bit careful, can be counted as an A, B, and C correction coming in here. So it can move up from here. So the safe trade here is triggered on this one here. So this is the 6650 is almost roughly the 61.8% retracement level, and also this low here, which is the catalyst to call this, to confirm this as an A and a B and a C wave here. So really, this is really, in a market moving up, This is really just in the normal process here, because we have the arrival. This is the classic trading levels pattern, the arrival, the reaction, the first high above the level, and then the ABC correction here. So then what we would do is we would normally look to go long above this level here, or even support on the 6-8 here would build in the first trade here, and then continue to build up and adding on 6-8-5-0 as well. So this is really, even though it looks bearish here, this is a way a market moves to the upside. So yeah, just need to be a little bit mindful. We don't have a lot of evidence in place. We don't have a nice 5-wave structure to the downside here as such. We don't have from the top here down to the 61.8%. If I can just move this across here, if that's our target area here, normally we would see from the top here, we'd see 1 and 2 and 3 and 4 and 5 down to here. And once we've got that in play, then we know that we've got the evidence that's required, and then we'd look for the A wave, the B wave, and the C wave coming up, and then we would move across here. But we don't have that. It's not looking like that so far here. Getting 5 waves or 3 waves to this space here is a bit of a lead on what's going to occur next. So if I get, yeah, well, I'll leave it at that. So building any short trades in here they need to be very small trades. So if you normally trade 3 contracts, well, then you just go in with 1 contract, so to speak. Alrighty, I'll leave it at that. Thanks for tuning in and enjoy the weekend. Cheers.